Hello, welcome to the European Open Briefing for Monday, January 29th. I'm Rafi Bajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So the US dollar is attempting a rebound this morning, following those 3-year lows it touched last week. It is being helped by a rise in US Treasury yields, though global bond yields are also up this morning. The Japanese yen is moving lower after it did get a bit of a boost on Friday, following some remarks by the Bank of Japan Governor Haruhiko Kuroda at Davos. The euro and the pound are both off their highs this morning. The euro is being supported, though, by hawkish remarks from an ECB official, but the pound has come a little bit under pressure following some political uncertainty in the UK. The Aussie did hit a 2.5-year high on Friday. It has come off those highs, but overall, commodity currencies remain very much bullish at the moment. Let's start, though, first with what's happening with the dollar. We can see the dollar index here in the chart in orange. It did hit a 3-year low of 88.44 on Thursday. It has managed to rebound to around 89.20 at the moment. Also in the chart here in purple is the yield on 10-year Treasury notes. It did hit the highest since April 24 of 2.7%, and we can see that that positive correlation between yields and the dollar appears to be restoring at the moment. We can see earlier in January, yields were rising whereas the dollar was falling, and now both seem to be moving together, which is what we normally see between yields and the dollar. On Friday, we did see the fourth quarter preliminary GDP readings. The headline rate was slightly disappointing, although looking at the details of the GDP breakdown, both consumption and business investment rose sharply, so that's an indication of a strong US economy. That could potentially lead the Fed to sound a little bit more hawkish on Wednesday when we've got the FOMC meeting. Although rates are expected to stay on hold on Wednesday, the Fed will likely signal a rate hike for March. And also coming up this week, we've got the non-farm payrolls report on Friday. We are seeing some uncertainty, though, about US trade policy, as well as the official line on the exchange rate, because last week's comments by Steven Mnuchin, the US Treasury Secretary, that a weaker dollar isn't so bad. And although President Trump did follow his comments by saying that he supports a strong US dollar, that did feed some doubts into the markets about the official line, US government line on the dollar. Plus, President Trump has once again been talking about unfair trade policies of other countries. Once again, fueling speculation about potential trade war. This time round, though, it's not with China; it's with the EU. He criticized the EU for very unfair trade policies. So that has paired the dollar's rebound this morning. Let's move on to the yen. Dollar yen here we can see has been fairly volatile, though within a very tight range. It did touch a 4.5 months low of 108.27 on Friday, before managing to rebound to just below the 109 level. The yen was boosted on Friday after speaking in Davos. Kuroda said that the Bank of Japan is finally getting close to its inflation target. The markets interpreted this as the Bank of Japan now being more optimistic about the inflation outlook. But then we did hear from his spokesman denying this, saying that this was merely Kuroda reiterating the Bank of Japan's existing outlook, that it expects to hit its target of 2% around fiscal year 2019. So we did see the yen falling back after that denial. Let's move on to European currencies. We can see both the euro and the pound drifting slightly lower. The euro hit a 3-year high 1.2536 on Thursday after the ECB meeting, where Draghi wasn't convincing enough to talk down the euro. But on Sunday, an ECB Governing Council member class note, he did say that the ECB should stop its QE program as soon as possible. So this raises the prospect of a growing split within the ECB. Those comments are supporting the euro a little bit, but not too much. The euro is still slightly down from Friday's close, currently trading at just above the 1.24 level. Moving on to the pound, we can see the pound is more comfortably holding above the 1.41 level. It did break above 1.43 level last week. We are seeing some political uncertainty at the moment in the UK amid reports that the Conservative Party are seeking more clarity on Brexit from Theresa May, the Prime Minister. It's being suggested that pro-Brexiteers want Theresa May to take a tougher line in the negotiations with the EU about Brexit, amid accusations that Theresa May is being too soft in her approach with the EU. Another risk this week is the House of Lords will be debating the EU withdrawal bill. Although this bill was passed by the House of Commons, it could face tougher scrutiny within the House of Lords. So all of that is pressuring the pound a little bit. Let's move on to the Australian dollar now, because the Aussie did hit a 2.5-year high of 0.8135 against the greenback on Friday. Broadly, US dollar weakness, stronger commodity prices. Of course, we are seeing a big rally in metal prices, particularly zinc and nickel. So that is supporting the Aussie at the moment. Although it has moved off those highs from last week, currently trading at around 0.80 versus the greenback. This could be due to some caution ahead of inflation numbers out of Australia on Wednesday for the fourth quarter, and the CPI data will come ahead of next week's RBA policy meeting on February the 6th. If we see strong inflation numbers, that would signal a hawkish tone from the RBA in the following week. And finally, let's look at the Canadian dollar, because it hasn't really benefited as much as the Aussie and the Kiwi from the commodities rally, as well as the weaker dollar. It did touch a 4-month high of 1.2278 last week, but we are seeing ongoing concerns about NAFTA. There is some optimism, though, at the moment. A US official said that there's just an air of optimism regarding the renegotiations of NAFTA following the latest round of talks over the weekend. But the loonie is down slightly against the dollar this morning, currently trading around 1.2347. We did see inflation numbers out of Canada on Friday. The headline rate fell slightly, but the various core measures, the Bank of Canada's core measures, did edge up slightly upwards. But overall, we can see the loonie has been fairly range-bound since making that 4 months high last week. And a quick word about oil prices, because oil prices are slightly up. At least WTI prices are slightly up, currently trading around $66.20 a barrel. And this comes despite the fact that we saw a jump in US oil rig count last week. The weaker dollar and the tightening market are still providing strong support for oil prices. I guess the markets aren't convinced yet that the rise in US output will offset the cuts being made by OPEC and some non-OPEC countries. Let's quickly look at today's economic calendar. We can see the main focus later today will be the personal income, personal consumption numbers, as well as the core PC price index out of the US. Later, the core PC price index is, of course, the price gauge which the Fed watches most closely. And later on, we're going to have some trade numbers out of New Zealand. That's it from me. Thank you very much for watching, and have a great day.